Hello guys, welcome to the trading and review session this month with me. Hopefully you guys all had a good Easter, or some countries I believe do Easter this weekend. So whenever you're celebrating it, if you're celebrating it, I hope you've had or will have a good one. Now, today we started a couple of minutes late. There's been some technical difficulties on my side. So it means I don't have everything loaded yet, but we're going to mainly use TradingView today to go through what we need to go through. And that's the main reason why. But we will be looking at different, different asset classes, different opportunities, but we'll just use TradingView to do that. Now, I know a lot of you do use TradingView, but very similar application if you're using other platforms as well that use our apps. Now, you'll see on the screen our chat room key for the Speak Up app today is 48977. So if you download the Speak Up app, and if you're watching live, by the way, download the Speak Up app, put that chat room key in, then you'll be able to access our private chat room, which I will be keeping an eye on my phone. So if you have any questions as we go, that's the place to put them, and then I can answer your questions. I'll check in every few minutes or so. Now, for those that are watching recorded, if you have any questions, you can email me, which is becky@tradewithufos.com. But you've also got, let's bring this up, tradewithufos.com/Becky, which is a link. If I actually bring that up here, so let's just put that up here. So tradewithufos.com/Becky. From here, you can book one-on-one coaching with me if you'd like, but there's loads of other resources. You can check on, these are now more historic trades to see what happened with them, learn from them, snapshots, notes, things that will help you identify why we place trades, why we cancel trades, why we might close them early or leave them to run, and learn from there. You can also understand more about our platforms, or the apps that we use on different platforms. Depending on which platform you use, depends on costs or one-off fees, things like that. You can learn more about our platform itself, Predictive Options Planner. And at the bottom here, you've got a place for questions and answers. So in there, you'll find, if you look through, probably a question that you might have has already been asked, in which case the answer is already there. But if not, then if you post the question there, then you're doing somebody else the favor in the future to get their question answered. So you've got that public space to do it, or of course, you've got my email address. So like I said, those that are watching live, use the Speak Up app, and I'm going to put that on again so you can see what the code is. There we go. You can download the Speak Up app, use that code in order to get in. Got somebody saying on the app, no audio. So looks like audio is working for me. Let me see here. If you can't see, then let me maybe bring up something so I can type it on the screen. Let's just bring up a Word document. So it looks like, so no audio, just this is for those that obviously, if you can't hear me, no audio, looks good. My end, mic seems to be working. Check speakers. So that's for everyone to see, obviously, not just those that would be in Speak Up. If you're having issues with audio, hopefully that helps. Like I said, it looks like my mic is picking up what I'm saying. So we'll see. Okay, so again, that's for the person that said no audio. Let me know if that changes by checking your speaker. Okay, so done our intro. We know what we're doing and where to ask questions. What we're going to do today is we're going to look at potential Forex setup, a potential stock setup, and a potential crypto setup. We might not find a valid setup on any of those, but we will do our best to figure that through. Now, what I will try and do actually is load my Predictive Options Planner, which is the platform that we use, our proprietary platform, which will help us to filter what we're looking at. So I'll let that load in the background, she says, connecting to TradeStation. But whilst that's doing that, let's take a look at our charts, and we'll look for Forex opportunities whilst we wait for that to load. Just going to check in on the speaker up and see if audio is fine. Let me know if you can now hear me. Let me know, because obviously want to make sure that people can hear if we're in the session. So keep me updated on that. Okay, so let's now have a look at some Forex opportunities. This is still connecting. Let me just load this. I had to turn my laptop off and on again before we started the session, which is why not everything's loaded up properly, but we'll let that sink. Okay, so let's look first at the Euro US dollar. It tends to be obviously a big one that people are trading. I'm looking at Oanda, so the data that's coming from Oanda. Just because I'm doing that doesn't mean you should. I'm just picking one. It happens to be one that I trade on a little bit more often. But you can use any data of the broker that you're actually using. So let's say if I do that, if you're trading with FXEM or Forex.com, pick that one so that you're looking at the relevant data. And we might see slightly different charts and slightly different opportunities. Take the ones that you see on your version, because that's where you're actually placing the trade. Okay, so with Forex, I tend to try and look at swing trading. So we're going to have a look at a daily on the left and a 55-minute on the right. We'll look at other timeframes as well. But this is going to be the general timeframes we'll use for Forex. And we'll use different timeframes with cryptos as well. Now, with Forex, we can also look at day trading opportunities, but we'll look at stocks as well for that. Let's have a look at the Euro US dollar. So we have a thick blue dot, probability upwards. That tells us this market is more likely to move up. Let's delete this here for a second. More likely to move up. Typically, this market would go up for 5.21 candles. Round that up, 6 candles. We're on candle number 1. So we have room for it to continue moving up. Now, one thing to bear in mind is that we do have sellers that we're getting closer to. That's this red UFO here. Once price, if price hits those sellers, we want to be out of any buying opportunity. So despite the fact that this might tell us probability is up, be aware that sellers will stop that or can stop that. So we want to be aware of them. If we've got room to take a trade all the way there, we will. If not, we'll look at a different opportunity. So on the right-hand side, we've got different green UFOs, so buying areas that we can use to be specific about our entries and stops. And we just want to make sure that this area is coinciding with our EMA on the left-hand side, which at first glance looks like it just is these bottom ones here. So let me draw around it and I will show you. So you'll notice that the EMA price is 1.0903. Let's round that. So we've got 4 UFOs. We've got 2 overlapping each other here, and we've got 2 overlapping each other here, or very close to each other here. The bottom 2 are the ones that coincide with that EMA number, because this one starts at 1.0905, around that. So we want to pick the ones that coincide with the EMA. That's what we're going to do. And we have an opportunity here. So let's put this on. It's always nice when that works out, when you get an opportunity straight away on the first market that you look at. Again, I'm just checking in audio-wise. Are we all good? Perhaps that person couldn't hear enough and that's why they left. Not to confirm. If you are still here and you can hear me, let me know. I was going to say, if you can't hear me, let me know, but you won't be able to hear me. So we have a buy opportunity. We want to now be much more specific on our buy and sell specific prices. So the entry, we're going to take this top number of the top green UFO here of 1.09046, round that up to 1.0905, round up to the closest pip. And now we're also going to add a couple of pips for the spread. Our bottom number, our stop loss number, we're going to take this bottom number here, which is 1.08672, round it down to 0.867, and then take off 5 pips for wiggle room. And that is going to be our entry and our stop. Now we can see here just by eyeballing that we've got room, if we get entered into a trade here, to take it up to these sellers. So I'm happy with that. And then we'll put in our safety target as well. So our final target is going to be up at these sellers here, just before them. So the price is 1.1028. That's already at its closest pip, so that will be our final target. Our safety target is more mathematical, so we'll figure this out now. So an entry of 1.0907, a stop loss of 1.0862. That's a risk of 45 pips. If we were to use 1,000 units, it would be $4.50 per unit. Now, I want to make this a $50 risk. Just because it's a nice round number, we're going to do 2 arms to the trade, or 2 legs to the trade, 2 limbs to the trade. And I want to make each of them $50 worth of risk. Makes it $100 as a nice round number there. Pick whatever you want, right? Risk whatever makes most sense to you, what fits with your trade plan. Our safety target is always 1-to-1 away. So that's easy. If it's 45 pips worth of risk, it's 45 pips worth of reward, which makes our safety target 1.0952. TradingView has done the maths for us. So there we go. Those are our parameters. We're going to say good till, let's put it in for a month. So we'll put it in for a month, but again, ideally you put it in good till cancelled as well. Okay, so that's the first half of the trade. Second half is going to be 1.0907. Same entry, same stop loss, same risk, $50. Our target in this case, we're just going to type over the price here to 1.1028. That's a 2.69 to 1. We'll put it in to last for a month and pop that in as well. So that is our first trade of the day. Just happened to be the first one that we looked at. We're looking at swing trading opportunities. So daily on the left, 55-minute on the right. We are going long and we are taking this to ideally the closest stack of sellers. Things may change, which might make us cancel this trade. If, as price gets closer, if it gets closer to our buy area and the EMA no longer lines up, so this blue line here no longer lines up, we cancel the trade. If price kind of bounces around a little bit and we end up getting another blue dot and another blue dot and another blue dot and another blue dot, and we end up going past what would be a normal move to the upside before price has entered, it's another reason why we might close the trade. For some of you, it might be if price hits the sellers first before it hits the buy orders. Again, you might cancel there based on the momentum of the price movement. The point is, have rules that tell you exactly what criteria needs to be met and therefore what criteria can change or not for you to continue to be in that position, whether you're in the trade or not. When will you cancel it before it triggers and why? And when will you cancel it after it triggers and why? And just have a set rule on that. You can be extremely liberal with it and say, it's in, it's in. I don't care. Whatever happens now happens. You could be extremely strict about it and check in every few days or few hours or few minutes to confirm that lots more criteria is being hit, that nothing's changing. You might have alerts in place. It might be a big list of criteria that has to stay the same before you would cancel anything. Ultimately, it's your choice to be as risk averse or risk tolerant on that. The stricter you are with your rules, the more risk averse you might be. The more lax you are with your rules, the less risk averse you might be. That's your choice. But pick your rules and stick to them, whatever they are, however many they are. Okay, we're going to put a little note on to say placed 12th of April, 2023 1 day, 55-minute. Okay, I'm just double checking as well that everything is good in terms of audio. Again, it looks like it's picking up my mic. Seems like everything is on for people to be able to hear. So I'm going to check in once more on speak up. Are we okay for audio? Again, those of you that might be here with me live, let me know that you can hear me. All right, so we've looked at our Forex potential. Now let's look at our potential stock situation. And we're going to look for a day trade. Markets will open in 10 minutes or so. Or we'll be able to look at them properly in 10 minutes or so. So we're going to look at, minimum price of $10, maximum price of $300. Again, that's personal. The lower the minimum price, the less likely it is to have institutional interest, which is something we want to see. So again, you can be a bit more subjective on that, but pick a number, stick to it. Max price is to do with affordability, right? If a stock is worth $3,000 per share and you need to put at least 2 shares on to have 2 targets, you're going to need at least $6,000 in your account just for one trade. So if you've got a smaller account, or you don't want to use up all of your capital allocation just for one trade, then you're going to want to trade in stocks that are cheaper. So max price I've put there is 300. Again, that's obviously very subjective. Looking here, our auto climate, we're going to look at a daily confirmed up. So this is actually more swing trading opportunities, but we'll look at smaller timeframes on the lower one. Confirmed up, sensible, near the EMA. And we're going to uncheck this. So we're looking for stocks that have a confirmed upwards climate on a daily time frame. Now, just to double check that that's the right thing to do, I want to look at the ES, which is the continuous futures contract that represents the S&P 500, which is the top 500 US stocks. Basically, let's look at what the whole market is doing. Whole market on a daily chart has probability up, meaning makes more sense that we look for individual stocks that also have probability up. Now, we've now come up with quite a long list. I'm going to try and filter that down a little bit more. And I'm going to say that I want us to be early into that move. Should come up with a shorter list. Maybe not by the looks of it. Still quite a long list. So let's just go through it literally one by one and look at the opportunities we have. Take the first one that comes up. Okay, so ACIW. We have thick blue dot, probability up, of course, that's what we're looking for. We've got an EMA of 26.15. We do have on a 144, we're not actually looking at a 144 though, are we? It'd be 55 or lower. So we do have an opportunity on the 55 minute. However, I'm going to bring our attention here, which is our essentially probability rate. We've explained it in more depth in other videos. So check out sharpening sessions, might help with this. Ideally, we want that number to be a minimum of 50%. Again, you could choose to be more lax on that and say, don't care what that number is, as long as everything else lines up. You could say it has to be 70%, 60%. We say as a general rule, 50% in our sessions. So yes, we've got a lineup where we've got buy orders on the right-hand side that coincide with the EMA on the left-hand side, but we don't have enough probability. So we're going to leave it at least on this time frame. I'm going to jump down to a smaller time frame, the 21 minute. Now the 21 minute has a 50% probability rate, so great, but we no longer have a lineup in terms of the buy orders with the EMA. The EMA is 26.15, so underneath this UFO, not lining up. Let's have a look at the 30 minute. Close but no cigar, as they say. So we've got 49.57%. It's not 50%, so we can't use it. I know it's close. Now, we could cycle through all kinds of different timeframes until we find a setup, but instead, I'm going to look at another stock opportunity, if we've got one. Okay, so potentially promising here. And the reason I say that is because we're within buy orders on the daily chart as well. So if we have buy orders on the daily chart that also coincide with buy orders on other timeframes, that also coincides with the EMA, we've got extra points in our favor, basically. So if we can find something that works there, we will. Obviously, nothing on the 30-minute. Let's try the 21. EMA here is 15.20. So have a look at the 55. Nothing there. Let's look. Unfortunately, nothing lining up here. I say unfortunately because I like it if we've got extra buy orders on other timeframes as well, but nothing lining up on our smaller timeframes. So we move on. We only want to take opportunities that are right there in front of us. We are very unlikely to find opportunities here. Also, it's just hit some sell orders, come off of that. And this is exactly what we would expect, is that price went up, right? So it started here, it went up, it hit sellers and immediately was pushed back down. And now it's lower than when it opened. Because it's crossed the EMA today, it's likely taken out any buy orders that are around that area. So we're going to move on straight away. But as we said, this is exactly what we expect. Same here. Price started here, came in, hit the sellers, moved out straight away. We've now got sellers very, very close by. We don't want to be anywhere near them if we're buying. So moving on. Next one here. Okay, so this one is close to buy orders on a daily chart. That's nice to see. 25.08, that's our EMA, which is just underneath the set of orders that we have here on a 60-minute. Let's look at a 55, 30, and just under 21. 25.08. Okay, so we might have an opportunity here. So let me take this moment to pause and have a look at the questions, if there are any. Okay, no questions yet. Again, if you're with me and you can hear me, let me know your questions as we go. Also, if you have particular markets that you want to look at, let me know and I'll have a look at whatever market you want me to look at on whatever time frame you want me to look at. Okay, so thick blue dot, probability up. To the start of that movement, we've got a little way to go before we hit some sellers. We've got buy orders underneath us on a daily chart, quite close by, which is nice. And we have some buyers on the right-hand side on a smaller time frame that coincide with the EMA. So the EMA is at 25.08, which is just above the last UFO that we have here. Now, you might say, hold on, it's not within it. And the rule is it's got to be within it, right? The EMA has to be within the, in this case, green UFO. However, the M in EMA helps us out here. It's a moving average. So as price moves, so too will the moving average. So if price were to come down and approach this UFO, the EMA will also come down. So price has got to drop 20-something cents to hit this UFO. Do we think the EMA might drop 1 cent to hit the UFO? Probably. Very, very likely. So we're going to take this bottom opportunity here. So that's 25.07 to 25.02. It's very tight. We'll obviously add a little bit of wiggle room there. Okay, we're going to look and see if we see the same thing on TradingView. This is where we're going to place the trade. I find TradingView much easier to use in terms of doing the maths. So it was, what were we looking at? CEQP. That's the ticker symbol. Let's bring this back. CEQP. Great. We want that on both sides. We see very similar things on the time frames. So we don't see, so on top we see a 21-minute time frame. We have slightly different numbers. We're going to use the data from top, assuming that you would be connected to TradeStation. So it was 25.07 to 25.02. Take that off. It's around here. Okay, so 25.02. What we're going to do is we're going to take off 10 cents to give it a little bit of wiggle room there. So that will take us to 24.92. So that's our entry. You can see on the left-hand side, thank you, regular session started. You can see that the price has jumped up now. The EMA has actually jumped up as well. Price is at 25.44 now. Now again, in order to hit our entry, price would need to drop just shy of 40 cents. So if price drops by 40 cents, do we think the EMA might drop by 9 cents? Again, I think it might. Quite likely to. You can set an alert here just in case, so that as price does approach, if it does approach, then you can decide whether or not to cancel this trade. Is the EMA lining up or not? But we've just seen quite a decent gap upwards. We closed yesterday at 25.34. We've opened today at 25.75. So a good 31 cents. 41 cents? Yeah, 41 cents higher than it closed the day before. So it might fill the gap and continue to come down. It might continue to go up from there. We will analyze this trade as traders and decide as things change, do we cancel this trade or do we leave it? For now, let's place it. 25.07 through to 24.92. $50 worth of risk, which is, you'd round that down, obviously 333 stocks or shares. So this means that our target one will be 25.22. There we go, 25.22. And let's put that in. In this case, it's a day. We want it done by the end of the day. We can put it on again if we need to. Again, you could do it as a good till date or good till cancelled, ideally. Second half of the trade, we are using the data from top to help us with this. So let me put in the entry and stop loss. The final target we'll get from top, and that will be 26.62. That's our final target. So 26.62 is a 10 to 1. Unlikely to hit, we'll be honest. The further away your target, the less likely you are to hit it. That makes sense, right? Much more likely that price goes somewhat in your favor than price goes really far in your favor. So more than likely, if we were to get into this trade, we would see, so it looks like price jumped back down here, by the way. So gapped up here and then gapped back down here. If we were to get into this trade, it's much more likely that we would close out somewhere en route to the higher target. It might be that we take it all the way there. We're using objective data to place it there in the first place, so we'll keep it there. Just bear in mind, this trade will probably need managing. Okay, a little note. So placed 12th of April, 2023. We've got 1 day on the left, 21 minute on the right. So we now have a swing trade, slightly higher time frame swing trade for a Forex opportunity. That's the euro dollar. We have some opportunities on slightly smaller time frames, but same kind of swing trading, short-term swing trading on a stock opportunity. We're now going to look at cryptos. So with that, let me bring up coin market cap. This screen is really far away. My neck. Okay, so we're going to bring up coin market cap to help us decide which cryptos we want to look at. Now you can filter this by volume, right? How much volume is going through it. You can filter it by the market cap or percentage changes, price, whatever. We'll filter it by volume. We won't look at Tether because Tether versus the US dollar is the same, pretty much. So we'll look at Bitcoin, obviously a very common one, Ethereum, and we'll look at some other ones as well. So we'll start with Bitcoin, and we're going to go up a few time frames. So we're going to look at a weekly on our left-hand side, maybe even a monthly. And we'll look at probably minimum of a daily, maybe a 4-hour on the right-hand side. And I'll explain to you why. So the main reason why, let me just check here, everything good? Yeah. So the main reason why that we want to look at slightly different time frames, and by the way, this is a personal thing in that ultimately do what you want, right? That's the thing when you're trading. Do what makes the most sense to you based on your risk tolerance and all of those things. But cryptos in general tend to be more volatile than other markets, right? So as a general rule, the US dollar might move up or down in a year 5 to 10% maybe. Bitcoin has been known to move 2 to 3, 400% in a year. Crazy numbers. Now it has settled more recently, but still it's a lot more volatile. So what that means is the smaller the time frame you look at, and therefore the tighter your entry and stop, the more likely you are to get stopped out, because the volatility might create more gaps and more jumps, might move quicker. The bigger the time frame, and therefore the bigger the gap between your entry and stop most of the time, the more room you have to counteract that volatility and not be stopped out, even if you're right, just because the market's moving a bit more. So that's my logic as to why I wouldn't use smaller timeframes in cryptos. But are there people that make good money doing it? Yeah. So it's not to say don't do it. It's just I'm sharing with you my logic as to what I would do. Again, I'm going to take this moment just to pause and see if anyone has any questions. It doesn't look like it. Okay, good. Hopefully audio is still good. We'll find out afterwards, I guess, see if the recording picked it up. Okay, so first things first, we are not, on this time frame, I'm not too enamored by Bitcoin, and I'll tell you why. So this number here, and it relates to the length of the lines that we see coming out of the dots. This number here is 1.28. What that means is, on a weekly chart, the price is currently 1.28 times away in terms of how much it usually moves. So I'm making it up, but let's say the ATR, that's what this is. Let's say the ATR, the average true range, the amount of movement that we might see in a day is 100 pips, or in a week actually, say 100 pips. And this might be 128 pips away, which means we are more than a week away from potentially entering into our trade, if that makes sense. So basically this number tells us how far price is away from a ideal trading price. If it's more than 1, it just means it's probably too far away because it's got more time for things to go wrong or change before we enter into the trade. Ideally, we want that number to be as low as possible so that we're more likely to get into a trade where everything's on our side and is still on our side in the first few days or weeks, hours, minutes, depends on the time frame of our trade. Hope I explained that okay, but basically we just want this number to be lower than 1, basically. So nothing there on Bitcoin for now. Let's have a look at Ethereum. Again, I'm keeping the weekly here on the left-hand side to have a look at this. So let's look at Ethereum. I'm looking at Ethereum versus the US dollar, but again, you could look at it versus other things. Okay, so on a weekly chart of Ethereum, we are within sellers. It's quite an interesting situation because we've got a couple of buyers beneath us overlapping, so buying pressure. Probability is up. We can see that with our auto climate. But we've also got sellers now that we're inside and we're overlapping. So we've got buyers and sellers fighting at the moment. Who will win? Couldn't tell you. So we're going to keep out of that. Whoever wins will be the one that has more orders. If there are more sellers or more sell orders, price will go down. If there are more buyers or buy orders, price will go up. At the moment, we don't have clear evidence one way or the other which one is more likely to have more orders. All we know is that we have sellers and buyers right now fighting. So we're going to keep away from that. And we will look at a different market. We've got enough opportunity. So let's look at Binance Coin, so BUSD. Let's have a look at that. Again, I keep away from USD Coin or USD Tether usually because they're, more or less the same as the US dollar. So Binance Coin, BUSD. Okay, so this one, BUSDT. Let's have a look. Again, that looks like it's hovering around the 1 mark. Horrible auto climate. Look at that. The thin dots mean unconfirmed. So this has had a lot of unconfirmedness. It doesn't know what it's doing. So we'll keep away from that one. Okay, let's have a look at Solana. So Sol, let's have a look at this. Sol, USD. I keep clicking Coinbase, by the way, just because it's one of the ones that I trade with. But again, pick the one. If you have an account with Bitstamp and you're going to trade with Bitstamp, use that. If it's Kraken, use Kraken. Use especially with crypto, use the one that you have the account with. And I say especially with crypto because the spreads are much larger in crypto than they would be in other markets. So the difference between two Forex brokers might be 0.3 of a pip. But the difference between two crypto brokers might be many, many pips, which makes a much bigger difference in terms of validity of a trade on one platform over another, or one broker over another. So we've got an unconfirmed climate here. So we're going to move away from that one. Seemed like we found a Forex trade quickly. We found a stock trade quickly. It's proving more difficult to find a crypto trade, but we'll get there. I'm confident. Let's have a look at XRP. XRP. This one, let's go XRP USD. Use Bitstamp, happens to be at the top there. Okay, things might be looking up a little bit for us here. Yes, looks like they are. Okay, so thick blue dot probability upwards. We are just over, literally just over 1.0022. Just over our, ideally we'd want it to be closer to an ideal trading price line. For the sake of example, we will still take this. Ideally, we want that number lower than 1, but it's not necessarily a huge reason not to take a trade. It just means you're going to need to check in on it more often to see what is changing on prices way to your entry. So we have thick blue dot, probability up. We have an EMA at 0.4501, which is nicely within this UFO here on the right-hand side. We've got room to take it to the sellers up here. So happy days. We now have our crypto trade of the day. We now have one of each. So our entry, 0.46504, round that up to 5.1. Add a couple of pips there for spread. And you could do it more with cryptos. Our stop loss, we're going to take 0.41466. We're going to do a little bit of maths here. I'm just going to bring up a calculator. So we want to add 20% of that gap to our wiggle room. So what I mean is that we're going to take 0.4653 minus 0.41466. That's the gap. That's the distance between our entry and stop. We call that our ES, entry stop. So 0.0564. That's the difference. I'm going to times that by 1.2 to make that 20% bigger. So we now have 0.060768. I'm going to round that to the closest pip here, so to the closest, to its fourth decimal place. So I'm going to round that to 0.0608. Okay, 0.0608. 0.0608. That now gives us our new stop loss. We've taken that off of our entry, and it is 0.4045. Okay. Basically, what we've just worked out there is the difference between the UFO, the difference between the area where we have buyers, and made that 20% bigger in order to have our wiggle room. Again, cryptos need a bit more wiggle room than others, I would say. Our final target we're going to take from here, so it's 0.6808. Yeah. Let's put this in. Entry price is 0.4653. Stop loss is 0.4045. Risk, again, I'm going to do $50, but you choose. Our first target is always 1 to 1 away, so that's now worked out at 0.5261. We'll put it in for a month. Again, check in on it, make sure that it's in there. Ideally, you can put it in for good till cancelled. Okay, same thing. So same entry, 0.4653. Same stop loss, 0.4045. Target, in this case, this is going to be our second target, which is 0.6808. That's a 3.54 to 1 if price were together. Okay, that is our third trade of the day and our third asset class of the day. We've put a trade on the euro dollar Forex pair, put a trade on a stock. We've also put a trade on cryptos, or a crypto pair. So placed 12th of April 2023. We used 1 week, 1 day there on the right hand side. Brilliant. So I'm going to take this moment to pause, have a look for any questions. Those of you that are live, now that we've looked through 3 different markets, let me know, are there specific timeframes that you want me to look at? Specific markets that you want me to look at? If not, I'm happy to go back to top and I'll look through some stock opportunities, just because we can use the scanning function. So it's less of a, let's try this one, let's try this one. It can be a little bit more tailored. So we use the scanning function on top to help us with that. Unless you guys have specific markets or timeframes you want me to look at, I will keep an eye, let me know. Otherwise, let's start with that. We'll come back to top. And I'm going to look now at our auto climate. I want us to look at a weekly one. So I want us to look at slightly bigger timeframes. I want us to be early in that move and near the 9 EMA. So you might notice when you watch my sessions, I'm slightly more biased to the higher timeframes. Let me explain why for those that you might want me to look at slightly smaller timeframes, and I'm happy to, by the way, let me know. But you might wonder why. So let me just explain. So for me personally, lifestyle-wise, it makes sense for me to have trades that are kind of going on in the background, trades that I'm not actively needing to look at. It allows me to travel more and to do different things that I do. Those that want to day trade and want to be focused and checking in and looking at it every few minutes, absolutely, you need to use smaller timeframes than I use. You need to understand your own lifestyle and psychology before you decide on which timeframes that you're going to look at. For me, when I've tried to day trade, when it's been happening in a short amount of time in front of me, and I either make money quickly or lose money quickly, I find that hard psychologically to deal with that. When it's slower and it's in the background and I don't really think about it so much, I just check in every so often, add a new trade or manage a trade or see what I've made or lost. I find that much easier personally, psychologically speaking, and time-wise based on my lifestyle. But for some people, that would be super boring to wait for potentially weeks to see the outcome of a trade. You want things to be more instant in terms of the results, good or bad, but to learn from it or to ideally make money, right, quickly. So you're going to want to look at smaller timeframes. You need to be psychologically comfortable with that, because my experience, I know a lot of people that when they try day trading, it can be hard psychologically. But if you're comfortable with that, great, do it. All that will change based on what you see me do in these sessions is the time frame. Everything else stays the same. Do I have a confirmed upwards or downwards climate? Therefore, am I going to buy or sell? Do I have buy orders or sell orders that coincide with the EMA price? Yes or no? Either I place the trade or I don't. Do I put my targets here or here? Exactly the same process. All that changes is the time. So I'm looking at a slightly bigger time frame here on stocks because it suits me better, basically. So let's have a look. And let's do it the other way around. We started with the A's last time, so we'll start with this. XPV. Oh, didn't think there. Okay. Brilliant. So straight away, no. This market has crossed the EMA. It's now below the EMA price, and we can see the line on the bottom of the auto climate here has gone down. So nope. Next one. Wendy's. The Wendy's. Okay, this one looks a little bit better. So we've got weekly on the left. Oh, we want weekly, sorry. Weekly on the left, even better. So we're going to look at a 1 day, 2 day, and 3 day on the right-hand side. Okay, so thick blue dot, probability up. We've got weekly buyers beneath us, so that's great. We've got no sellers above us by the looks of it. So in theory, room to make definite money on this. Obviously, that's not going to realistically happen, but we don't have sellers at the moment in the way, so we can have a trailing stop with this, take it as far as it could go. On the right-hand side, we do have buyers here. A couple of things wrong with it. One, it's not aligning with the EMA price, which is 21.69. Two, not a high enough number here. So we're going to look at our 2 day. We'll look 1 day, 2 day, 3 day, and a 144 minute. So here we've got the number that we want, the probability that we want, but we don't have the EMA lining up. Let's look at the 3 day. Unfortunately, just shy of the EMA lining up. Not sure if it will coincide as price comes down. Let's try the 144. Unfortunately, not lining up. So in this case, we had a lot of things in our favor, but we didn't have the EMA lining up with the UFOs on the right-hand side. So no trade. Okay. This one again looks promising on the left, but we'll see here on the right. So we've got buyers just beneath us. We've got sellers reasonably far away. We've got room to take it there at least. And we have our EMA is lining up with a UFO here. A couple of reasons why we won't take it. One, this number is not 50%. Two, is that the EMA is literally just within it to the bottom. So remember, it's a moving average. As price moves, so too does the EMA. Price doesn't have to move too far for the EMA to no longer line up with that UFO. So change time frame, see what we have here. This is looking much more promising. So far the daily is winning. And if we don't find a better opportunity, we'll take this daily trade. We have UFO here between 12.40 to 12.18. So the 12.32 EMA sits nice and snugly within it, which is great. And we've got more than 50% here on the daily chart. So far daily is winning. Let's have a look at the 2 day. 2 day is not winning. 3 day. 3 day is winning. And I'll tell you for why. There's different reasons. Number one, this number is higher, right? Ultimately, we have a better probability of this going in our favor. So yay. Second reason is because we've got 2 UFOs overlapping each other. We've got more of a buffer for us to catch the right movement here. So this is the one we're going to take. We're looking at VGR. Let's go back to TradingView. We'll have a look at VGR and we will place this trade. That'll be the last trade of the day. And whilst we're loading this, let's double check any questions. Can't see any. Okay, great. So we have a 1 day on the right and the entry price. So again, we're going to use the data from top here. So we're going to do 12.40 it's going to go down to 11.27. So that's going to be with a bit of wiggle room there. So 12.40 to 11.27. 12.40 to 11.27. Just have to keep saying it so I don't forget. 12.40 to 11.27. Brilliant. Okay, so that's our entry and our stop loss. Our final target will be 13.17. We'll actually have to see here if this is going to fit. Might not fit. Oh no. Oh no, this won't be a trade, unfortunately. So, okay, we have a choice here, and I'm going to take the choice that allows us to place the trade, but that's not necessarily to say it's the best choice. So, on our 3-day chart, we've got these two UFOs overlapping, right? So we have a bigger area. Now, what that means is, in order for us to take it to our 13.17, we want our area, and I'm going to clone it just to show you. We want our area to be able, how can I say this? We want it to be able to move at least 1-to-1 away before it hits the next set of sellers. So because the size of this area is now bigger, if we clone that and make it go on top of it again, then 1-to-1 away is further than where the sellers start. We don't want that. We want the 1-to-1 to be before the sellers start. So we have a choice. We could move on, not place this trade because it's not hitting the criteria, or we can reduce by going to the daily chart. We can reduce our entry and stop, which allows the movement that we need in order to hit our first target, our 1-to-1, to be closer to us. It still fits the rules. It's still more than 50% here. It's still a UFO that's combining with the EMA, still probability up, gets us out of the trade before the sellers arrive. So it's still winning. But something to bear in mind is that the tighter, so this would be, 12.08, the tighter the distance between our entry and our stop, therefore, the more likely we are to be stopped out. Easier to hit target one. So pros and cons to everything. If you've got a tight entry and stop room or space or level, you're more likely to hit target one because price doesn't have to go as far before it hits your target. So that's good. But it's smaller, so you're more likely to be stopped out because you have less room for error. So pros and cons. I'm going to choose the option here that allows us to place this trade because it still fits our rules. But you might say, I'm not willing to do that because I know on another time frame I should be widening my risk, or I'd rather this be wider anyway to give me more chance of, or less chance of being stopped out. But let's put this on because again, still fits the rules. Your choice on how to balance that will come from your own risk aversion or risk tolerance. Okay, so our first target in this case is 12.72, same risk as always, $50. You choose what you want it to be. I'm going to put it in for a month. First half goes in. Second half, same entry, same stop loss, same risk, $50, which will end up being 156 shares. And the final target is 2.41 away at 13.17. Okay, so we have 2 trades on stocks, 1 trade on a currency pair on the Forex market, 1 trade on the cryptocurrency market. Slightly different timeframes that we've used for each of them. We put a little note in here. It's the 12th of April, 2023, 1 week. Okay. Now, with all of them, depending on the timeframes that we've used, will depend on how often you need to check in. Bigger the time frame, the less often you need to check in to see if things have changed and therefore cancel or edit a trade. If you're on smaller time frames, the more likely or the more often you need to check in. So I would say, as we are using a weekly on the left, then you want to check in maybe a couple of times a week. If we're using a daily on the left, you want to check in a couple of times a day just to see what's happening with the EMA, to see what's happening with the auto climate, if that's changing, to see what's happening with sell orders or buy orders and how they're coming into the markets or leaving the markets. If you have any questions, best thing to do is go to tradewithufos.com/Becky. Let's put that here. From here, you can check out apps and courses and coaching, some of which are free, some of which are paid for, all at different levels. Check out what you think you need more help with and go from there. You can, if you go to the bottom of the page here, probably find the answer to the question that you might have, or if not, do somebody else the favor to ask the question in a public space, allowing us to answer the question there, which helps, obviously, for other people to see the answer and to learn. Happy trading, happy Easter. Have a good one, and I will see you next time.